Gautam Shah, founder of Goldilocks Global Research, joining us this morning. Gautam, as always, thank you so much for taking the time and good morning to you. What do you make of the latest resuscitation in geopolitical tension and what that means for global markets?
Good morning. There seems to be a massive disconnect between the news flow that we are getting on a daily basis on the geopolitical front and the way the markets are reacting to that. In fact, for the first time in 18 months, in the recent past, we have the Indian markets outperforming the rest of the world. So we've had a scenario wherein Asian markets have corrected big and the Indian markets have been quite resilient. And if I simply go by price action, which I want to, given my years of experience, I want to believe that the market is still in fine form on the charts. We have been oscillating in a sort of a band, 23,800 on the downside, 24,600 on the upside. Last time when we were on your channel, we spoke about the Nifty possibly going towards 24,600 and cooling off. That's exactly what has happened. Now I think we are in that phase of base building where potentially we could be preparing for a breakout on the upside above 24,600. And if that were to happen, I think it will open up another 1,000 points on the upside. I know when you go by the news flow, this is a view that it's very difficult to believe in, but that's what the charts have done. And we have a situation where everything is in favor, actually, apart from geopolitics, because crude has corrected, India VIX is back at 13, technology started to participate, banking is done well, result season, very early days have gone off well, and domestic money is still winning over FIS selling. So putting all of this together, I want to be optimistic, and you still have a parallel bull market running in the small caps and micro caps, something that we've talked about repeatedly in the past.
Okay. Gautam, I think you've been talking about India's underperformance bottoming out as well since quite some time now. And you know that probably your underperformance is bottoming out. However, if you have to look at individual sectors, where are you in terms of technology? Because that has also been your call where you did mention, I think in the month of May to us, that probably from here on, you could see that upcycle coming in terms of IT. With the way earnings has panned out, it seems there are some green shoots.
But I think technology has been in a downtrend for about 9 months. And in that period, it lost about 35, 36%, which was large by all standards. I think the index tested our medium-term, long-term support of about 26,000. And I think about 10 days back, we put out a note to clients that probably now the worst could be over. And the charts were indicating at a possible turnaround. We didn't know the news flow in terms of results, but so far the results have been a positive surprise. And I'm not surprised because the charts were indicating the same. And too much negativity and pessimism was already in the price. So I strongly believe that the worst is over for technology. We are probably headed higher from here. We will go to a level of 32,500, but nothing substantial. I don't think it's the greatest opportunity in the Indian markets, but only because it has fallen so much, there will be some recovery of about 10-12% that will obviously help the Nifty sustain above support levels.
Gautam, hi, good morning. We spoke some time ago about the Nifty year-end outlook, and you were not very positive on it. Has anything changed?
Honestly, Tamanna, nothing has changed. I think if we don't fall and if we don't collapse itself is a big win for us. And given the kind of world that we have lived in the recent past, I think that's a great outcome. Honestly, the Nifty doesn't matter. The top 100 do not matter because they have been underperforming the rest of the world, and the real opportunity has been in the micro caps, small caps, mid caps, all of which are near lifetime highs and beyond. So it's important to be in the right segment. It's important to commit where the action is, and the action is clearly in the broader markets. On the Nifty itself, because I believe that most of the negatives are priced in, I want to believe that there is a possibility of a test of 25,500, 26,000 by the end of the year. So that possibility has come up in the last 15 days. But again, in percentage terms, it's nothing substantial.
Yeah, it's a slight improvement from your last outlook on the Nifty. Just on the point that you previously made, that in the micro caps, many of them are at lifetime highs or beyond. Doesn't that weaken the case for fresh investments right now?
Well, it does not. I think we've seen multiple times in the past that segment rotation and sector rotation and theme rotation is a part and parcel of every bull trend. So if you are in the large caps, obviously you'll be feeling out of place. Nothing has really worked as such. But micro caps and small caps are still doing well. And I think fresh capital on the domestic side is moving in there. FI selling has been aggressively talked about in the recent past, but now with other Asian markets coming under the hammer as well, I do believe that India will start seeing reduction in flows on the way out. So that itself, I think, will be a big positive.
Okay.
Okay, I do want to ask about the crude sensitive stocks as well, right? Because these are stocks where they move in a very volatile fashion one way or the other. Gautam, would you avoid this cohort of stocks in the near term? And specifically, do you have a view on Brent? Because it's once again crossed that $80 per barrel mark. It's headed towards 84, 85. I'm talking about Brent. And what is the potential for upside based on the charts that you're looking at?
See, markets don't discount things twice, thrice. I mean, we saw this in COVID as well. You can't scare the market again and again with the same issue. And that's probably the reason Indian markets and world markets have been quite resilient to all the comments that is coming out of the US. If you look at the NYMEX crude, something that we track closely, I think we were staring at levels of 110. The fact that from 110 we've come to 70 itself is one of the biggest win for the Indian markets in the recent past. And it looks like it's going to stabilize in that band of about 70 to 85. If that happens, that itself is a positive because we don't start worrying about that aspect of the market, which can definitely have a huge impact on the economy. So I think crude cooling off, India volatility index cooling off, I think are two big positives. And with the comeback of banking, I think it's very important that I think there are indications that economy consumption is coming back. I think with the way Eternal has done, with the way some of the hotel stocks have gone, some of the FMCG stocks have come back, banking making a comeback, NBFCs, housing finance companies. I think there is a play on economy that has started to play out for the first time in 18 months.
Okay. How about, Gautam, the energy, pharma, and cap goods space? You had advised to focus on all of these three sectors as well. Where do you stand right now?
So I think these are all structural trends. I think our favorite has been pharma. I think given the kind of up move that sector has seen, phenomenal across the board strength. And I think this is going to continue. Our working target of the NSE Pharma Index is about 27,500. So there is another 2,500, 3,000 points to play for. But I think a dark horse sector that came up on our radar a couple of weeks back, and we put it in our notes, is real estate. I think there is a massive turnaround that has already taken place in real estate, and the index will go on to do much bigger things going forward. So I'm looking at a 25% appreciation in the real estate sector from here. It's become the poster boy for some reason. Fundamentally, you might not make a case, but technically, there is a feeling that it's coming back strongly. So that's one of our favorites at this point of time. Energy remains a structural story. I know it's gone a little off track in the last 1 month, but I think it was a little overdone on the way up. So it's just cooling off, and post the cool off, it will come back. So capital goods and energy, power overall, we remain positive. It's just that right now is not the perfect time.
An interesting point that you make about the real estate space, Gautam. My question then is it only real estate, or do you also see the ancillary space where you could see some bit of good moves, say for that matter, cement that could be coming in, as a sector that one should be watching out for? I know Alex wants to talk to you about the financials, but on that note, the home finance companies as well, how do you look at that entire ancillary basket?
Yeah, I know that's a good question. It's come to us a lot from clients that if you like real estate, will the ancillary start doing well? The answer to that is no. Because right now it's just the top 7-8 companies in the real estate space that have come back very strongly. Look at Bangalore real estate, look at Bombay real estate, and even Delhi real estate to a certain extent. That, according to me, is a big opportunity. Whether it trickles down to the ancillary stocks, we'll have to wait and watch. We don't have immediate indications as yet. But home finance is definitely a space that I'm looking at. A lot of companies have broken out in the last 10 days. It looks like a genuine one. And in these last 6 months, the fundamentals have been quite intact for these home finance companies. And given the interest rate scenario, the comeback in the entire financial services space, home finance is definitely that we like.
Gautam, I want to ask about the banks. And I know that you preferred, if I remember correctly, the PSU banks over the private banks. At the end of the week, you're going to have a host of them post their numbers. And from the PSU banks that have reported so far, one or two of them stand out already, right? Where they've had a pretty decent performance on the asset quality side, and they've protected their net interest margin. So the fundamentals are looking okay. Credit growth is looking okay. How do the charts look?
if you want to create alpha at the markets, banking is still not an opportunity.
Okay.
You know, when they go up 5-6%, we all get excited. But then in the US and in many Asian markets, you have trillion-dollar companies going up 40% in a matter of many months. So in that sense, I think Indian banking is not exciting. It will do well. It will do its high single-digit returns probably, but nothing substantial, as I said. I still like the top PSU bank. I think that's still my favorite from a longer-term perspective. And the private banking will make an attempt to come back, but because of this FI angle, I don't think it'll be easy for them to really scale up to new heights.
Okay. All right. On that note, Gautam, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you so much. Thanks for having me.